Okay, my name is Darren Wagner. I'm the founder of Dragon Charts, and I'm going to be your host of this evening's webinar. And I'm also one of the mentors here at Dragon Charts. About this stock analysis webinar, we conduct these every day, Monday through Thursday, as well as on Saturdays we have a Q&A session. And you can record the session if you'd like, and then you can review it later on. Just click on the record button on the upper right side uh, of your screen. There's a record button. So first of all, is the audio and video clear for everybody? Everything look good? Okay, great. Okay, fantastic. Okay, well, what we do here at Dragon Charts, among teaching people how to become traders, is we actually do a live daily stock analysis session where we take some stocks in various markets and just look at the chart patterns. These are not recommendations to actually buy or sell any of the stocks because we're not a brokerage firm. Instead, what it is education, teaching our students how to use technical analysis so that they can profit in the stock market as well. We've been using these strategies for about 10 years with my company, Morpheus Trading. We look at a different market every day. Today, we're actually looking at the Hong Kong market. It doesn't matter which market we look at, whether it's Hong Kong or India or Indonesia or even the US market. The concepts that we teach work regardless of market that someone's looking at. So the nice thing is that they don't have to worry about even if you don't trade that particular market, the same patterns work when trading one's own market. Now we actually have a software coming out very soon for stock scanning to actually help somebody find these patterns automatically through our software rather than having to manually do it. But it's still important to understand how the chart patterns work. So without further ado, let's go ahead and get started. We're going to take a look at stock number 753, which trades on the Hong Kong market. This is actually Air China. And what we're looking at here, is a potential trend reversal. And there's several types of plays that we like to trade at Dragon Charts. One of them is a trend reversal. And a trend reversal simply means that a stock that's been going in a particular direction for a long time has started to show signs of going in the opposite direction. Now, a downtrend is defined by a series of lower lows and lower highs. Notice with this stock, we have a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and so forth. So that's defined as a downtrend. Now, what's happened though, however, is the last time the stock moved up and pulled back, notice how it actually formed a higher low. This low right here was higher than this prior low. So this is a higher low, which is the first sign of a potential trend reversal. Now the trend reversal will be confirmed if the stock now moves up above the high of this price right here and forms a higher high as well. Notice how the price action has just recently broken out above this downtrend line that we've drawn. And that's also done so on higher volume. Notice these bars in the bottom here, the volume bars, indicate that actually there's been institutional buying interest. Hedge funds and mutual funds and so forth are actually starting to support the price of the stock. And volume is the fuel that's necessary to drive a stock higher. So we like this, and it's also moved above the 50-day moving average, which is this green line, and it's moved above its 20-day exponential moving average, which is this blue line. So whenever the stock moves above both of those moving averages, that's also an indicator that momentum is reversing on the stock as well. So we've got four things that we like about this pattern. We've got a breakout above the downtrend line. We've got a rally above the two moving averages. We've got higher volume, and we've got a higher low. So in this particular instance, what we'd like to do here is again, it's not a recommendation to buy the stock, but if we were going to buy it here, we'd like to see a pullback. Okay, just a slight pullback to this downtrend line around the $7.75 to $8 level. That slight pullback would actually provide us with a better reward risk ratio for entering the trade as opposed to buying after 3 big days up. Or if we don't get a pullback, a couple days of sideways price consolidation would also work just fine as well. The next stock I'd like to take a look at also trades on the Hong Kong Stock Exchange. It's Number 116, which is Chow Sang Sang. This particular stock is actually a different pattern. What we have here with this stock is actually an example of a new uptrend that's already developed. Notice how the stock is actually, if we can draw a horizontal line here, and this horizontal line actually shows where a prior level of resistance, this is called resistance, the stock couldn't get above that price, had resistance. Notice how when the stock moved higher in this last move and pulled back, it stopped at that horizontal line. What happened here is that this prior resistance level has become an area of support. That's one of the most basic tenets of technical analysis, is that a prior level of resistance becomes the new support after the resistance is broken. Now notice also the stock found support right at this 50-day moving average. This is one of the reasons why we use this 50-day moving average. It's a great indicator of trend, often acts as support when a stock is entering into a new uptrend. Now the stock over the past couple days has stalled a little bit at this prior high, marked by the horizontal lines, had resistance. But what we expect to see here is some sideways price consolidation for a few days, and then a potential breakout above the high of this prior high. And stocks that are at 52-week highs generally are the stocks we like to buy the most, because they generally are the strongest ones, and they will continue much higher. So if I was going to look to enter this stock, I would now wait for a breakout above the high of this horizontal line. Of course, we always use stop losses in case we're wrong. We like to use a protective stop. In this case, we would put a stop loss below the 50-day moving average, which means if the stock failed to move higher, we would automatically be out of the trade if it went back below the 50-day moving average. So this concludes this evening's stock analysis session, which again is in the Hong Kong market. And like I said, we do this every night at the same time. So you're welcome to join us again. And thank you for coming.